Hi, welcome to the 9-part series on customer renewals and corresponding valuation impact. There are 9 parts to this video series and they are very short snippets. And this particular episode, we're going to talk about what I call the valuation shock. I need to tell you something that might be worth millions of dollars to you. A company I know, they were planning on selling their company. They had achieved 60% year-over-year revenue growth. The CEO expected 10 times ARR. The buyer looked at the renewals. The retention rate was about 78%. So the valuation dropped to 6 times overnight. The CEO was shocked. We are growing fast. Why does retention matter? Here's why. The buyers, they're not buying your revenue today. They're buying your cash flows tomorrow. If customers are leaving, those future cash flows are not worth much. Listen to this. Every percentage point of retention, they impact the valuation by half to 1 times ARR. And think about that. If you're doing 50 million ARR and you improve your retention from 80 to 90%, you just created $150 million in value potentially, depending on what your total revenue is. So here's what renewals really tell buyers. Your renewals show if your product actually works. Anyone can buy customers with discounts and heavy sales spend, but renewals, that is when the customers are voting with their wallets, and that's the truth. I worked with a company growing bookings at 80%. Amazing, right? But only 68% renewed after year 1. What the buyers saw? A broken business. All these new customers, they were leaving. Renewals also show leverage. 90% retention means for every new dollar, you retain 90 cents. So the dollar compounds in value. 70% retention means you're on a treadmill replacing 30 cents of every dollar. So here's the real story. There are 2 buyers. Buyer A offers 8 times ARR, buyer B offers 10 times, but only if retention stays above, let's say, 88%. The company we're talking about is around 86%, pretty close. So if you look at the recent cohorts, when we looked at that, 90% retention in the last few months. So we showed that to the buyer, they paid 10 times. That 2-point difference in multiple was worth millions of dollars. So the key 2 takeaways: every percentage point of retention improvement is worth half to 1 times ARR multiple, and that is real money at exit. And number 2, the renewals, they prove product value better than anything else. Buyers, they trust retention data more than they do the growth rates. The next session, I'll show you exactly how buyers are thinking about renewals and how do they analyze your renewals during the diligence. Most CFOs get blindsided because they don't know what buyers are necessarily looking for. So don't be that CFO. I'll see you next chapter. Bye.